Good day, everybody. Brian here, quantlabs.net. Today is May 20th, 2024. I'm going to show you a new way that I'm using to pick out winning ETFs from winning high momentum US, well, it can be pretty well ETF market sectors that I track, over 60% of them. Markets are a lot weaker than you think. I'm going to show you how I mean. So right now you're looking at, I've got here seven different market categories that look like they have some volume or some momentum behind them. And let me just straighten this stuff out here. Oh man. Yeah, there you go. Okay, so what we're going to do is give me a lengthy video, and I'm going to show you what I've got here. Okay, so these are the ones that are performing positively for May 2020, going 2021 tomorrow. And that means that these are high momentum. So let me show you what I mean. So in here we have the first one, which is new commodity. It could be pretty well renewal um, sectors, ETFs that focus on that. So in this case, we have a typical data sheet that I use. I haven't shown this in a while. These are a typical ETF or just any asset mutual fund tear sheet that most portfolio managers that run a ETF will present you. So you'll have your benchmark, which is standard. In this case, I'm using triple Q, the Qs. We have here all the different metrics used. Some are quant and classic trading metrics. In this case, we've got benchmark of the QQQ returning 36% over pretty well the last year. And this year, this particular one's returning a negative, as you can see here. But why I'm choosing this is pretty simple. So we have our Sharp, we have our benchmark, sorry, our Sharp for the benchmark as well, as you can see here too, for the QQQ. And we have here max drawdown, 15% drawdowns, pretty well a standard you should tolerate. Beyond that, don't trade the sector, don't trade the asset if it's got higher drawdowns, because that means they're more volatile. And in this case, what I want to show here is the more important metric that I want to use. As you can see here, monthly returns since 2023 of May. This particular sector, commodity new, is returning 16% for this month. So because of that, these are the kind of ETFs that you want to have potentially in your portfolio at that time. This is a better way to manage your timing and to see how this particular sector is working and add it to your portfolio for the month. So in my case, um, I'm all tracking this myself based upon the software I've developed. So in this case, for a commodity new, there's a bunch of ETFs you could pick, but right here is the optimal weights allocated among all those particular ETFs for that sector. And to get optimal return, you want to hold out of that batch 72% in ICLN and another 27% of UNL. So TradingView as really good as it can be. We can research these ETFs. Now, depending upon your time frame, I like to look at 1 hour. You can, and that's so you can get in on a particular trade. This might not work for you. You do a 4 hour, 2 hour. 2 hours pretty optimal. 1 day. See, it's a lot more traded here. And then you have the metrics. So this is my custom Ichimoku cloud. Now, as you know, a few weeks ago, I was able to showcase how using TradingView that you can use TradingView to fully automate your trades in the background and not do anything with a service called Traders Post. And it works really good. I just got a trade this morning at 4 in the morning. I never would have thought you could trade that at that time, but here we go. Either way, you can see it's kind of top and it's breaking through the prior high for this particular INFL. More important is you want to look at the profit factor and the percent profitable. These two metrics are very critical. It's kind of like a high level of back testing. So you can see here, this profit factor is not my ideal um, ideal pick for an ETF because I like to see the metric number I use for anything universal time frame is 1.2. And obviously, the percent profitable matters as well. So when you look at this, um, would you consider it? Now, this is on a daily time frame. Go to what I would use, the 1 hour. It seems light, but you can see here how roughly May 1st, it's been a major swing up from $31 to about let's see here, what are we at? Roughly 32, 33. So yeah, close to 20%, I guess, which is not bad for a very declining month in May. How do I know that? One place I like to go to measure that is, let's see here. I'm going to go over to Wagtail. Or sorry, Wagtail. That's my technology I'm using for the new website. Yes, we are working on a new website. So let me pull that up. So we're going to go to Market Watch. And typically what I like to use is just the S&P 500. That's what most portfolio managers are using for their own metrics to see if they genuinely beat the market. So here you get a fairly good snapshot of what you can expect the market should be. So for the month of May, we should have gotten a 6% roughly for the month, and 5 day at 1.66. So it's been a fairly weak month for this year, considering. All right, so going back to that, knowing all that fun stuff, let's go back into our sector here, which is, of course, as I said, commodity new, the renewables. So this is an okay sector to be part of because it's done well for the month of May right here. So that's one sector. Okay. So out of that, the question then becomes, would you add in this particular ETF for the month to watch to see how it performs? And when you look at, as I said, the portfolio optimization here, you can see, I see, I'm sorry, I've got here wrong. ICLN. That would help if I got that. ICLN. So we're looking at clean energy, renewable. So you can see here again on the hourly, we are at 32, sorry, at 12, 13, reached a high of 14, and it started to decline. So typically I could track this to see how that particular market sector is performing. And obviously I probably would take off this particular ETF as it started to decline here mid-May. Okay. So I wouldn't consider that as a great ETF the last 2 weeks of May, but I would have probably, you can see here the steep price incline on that particular ETF. The other one here we have is UNL. See how that one's done as well. So this is now natural gas. It's a clean energy, I bet, for some. Depends how you classify it. So here we're at $7. Now we're kind of up in the neighborhood of 830, 840. So that's a pretty good increase compared to the S&P 500. Okay, and again, that's on an hourly basis. That incline started May 14th. So again, you can see that maybe you might have added that ETF to your watch list, active watch list, and let as I said, if you're using TradingView and that other service, automatically trade it. And you made some nice money with that. Okay, so let's go over to the next sector here. Okay, so that is the new energy, new commodity. So this one is inflation, as I showed earlier, so you know what to expect. So here with inflation, it's at 4% in May, March, 6%, 2%. So in here, this is what the Fed's struggling with because inflation's still there. And let's check out that ETF, which is really one. I just showed you it. This one here, INFL. Okay, so let me pull that up. Yeah, so you can see here Horizon Kinetic Inflation Beneficiaries ETF. Again, as I said, this has been pretty good all month from 31.70 to in around 32, maybe 33, 10%. Not bad, okay? ETF. So what we're doing is we're weeding out of literally 900 plus ETFs, also using the timing to get the right run up on those ETFs that perform for the month. And I've got maybe only 7 sectors that perform for the month, according to this system charts, whatever you want to call it. So inflation's done okay for May. So why not benefit from inflation when real inflation's costing you on your purchases? You can maybe get some money back by buying that ETF. There's another one here. This one's overseas Europe. So Europe's been pretty strong the last 2 months. Well, the point here is you gotta make sure you don't listen to a lot of the financial news because a lot of it is either distorted, wrong, using the wrong information from the past and putting out claims that this is a good place to go. I'm using raw data here, so I have no in, investment here to tell people to do this or that. This is what my charts are saying based upon what I'm seeing here. So you can see here a good thing about this particular asset class of Europe. It's been performing pretty good, at least for the last month. So it's been outperforming overall the QQQ, and this may continue, just depending upon obviously going into the summer. So you can see here, April did pretty good. It's been doing pretty good for the last 3 months, but very strong in April, decent strength in May, and outpacing the benchmark of either the QQQ or the S&P 500. So what ETFs do we have here to select from? Well, here in Europe, we have a bunch, but the ones I pay particular attention to is Turkey, Greece, and EUO. So which ones are those? These are MSCI. Okay, so let's look at the first one, which is EUO. Okay, so ultra short euro. Now this is the currency euro. So that one I don't think I'd want to take, but let's see what happened for the entire month here if I do a daily time frame. So again, that's an hour, so it's been declining however long the last portion of the month. But if you go into the daily, you can see it's done okay. From here, from the 12th, price here at 29, had its 10% increase between that time and the 31st. Now it's gone into decline. So you could have gotten a nice run up here, especially around here, if you knew about it. Okay, now will this momentum continue? Hard to say. If you look at the chart, the monthly chart here of the sector, did very well in April. It is tapered off in May. Where will it go in June? Nobody knows, but at least you can track it day by day, week by week. Okay, so let's check out some of the other ETFs that were picked there. So now we have Greece and Turkey. Turkey was impressive. Again, I don't make this stuff up. So if I look up Turkey, let's see here, ETF, MSCI, run up, just a solid run up from actually January from $31 all the way up to $40. Okay, so it's done very well. Um, Pretty well. That's a daily basis. So it's done pretty good. And again, you can look at the profit factor here as well. Percentage of winners, profit percent profitable. So, I've seen ones that are at 75%, but we're just dealing with ones that we see that are the sector's doing well. So this one's doing good for Turkey, Greece as well. Um, this one's done very well since mid mid April, 37, you know, 41 and beyond. So it's over 10% return over that period of time. So these are non-US, as you can see. Just talking to a bunch of people saying they only want to do US. You're not seeing a lot of US here, but there are some international doing quite well. And these are ETFs listed out of a US company. Global X definitely US based. All right, so those are Europe doing fairly well. Now the next one is we've got here Latin America. And again, the benchmark is still outperforming the general uh, strategy here of Latin America. And there's your return there for the last year. What matters to be really specific for timing is the monthly return. So May was good, and it may go bad again next month, but you can still add these particular ones I'm going to show you for the first week of June. If they're not doing well, you just remove them. That's it. Simple. So here we're talking about, I believe, I don't remember what countries these are. I think one's Brazil. Oh, let's look at trading view. So we'll look at ECH. Again, that's at 62%. That's allocation again out of all the ETFs in that sector. So if I look at this one, ECH, um, Chile, done pretty good. So again, they're mid-April, from 25 to around $28. So again, 10% roughly for the month. We can also look at EWZ, Brazil. Looks pretty flat to me. Is it worth looking at? That's why it's only 37%. There's probably not a lot of big star performers in that sector in the Latin America. Now, if it's gone from 29 to 31, 32, it's done good. That's between, again, April 15th to first week of May, right there. Okay, so yeah, so it did okay at that time, but it's declined since the last few weeks. So again, about 10% in this run up here. And let's look at some more here. So again, I believe these are US again. So these aren't as strong. They can be very strong, but we're looking at energy for US. So here we got only 7%, 8% for the month. Prior month not doing too great. And this is the volatility of this sector being oil and the industries that support oil. But 7.95 is okay. So those particular ETFs are um, we have here MLXPX and UGA. UGA is the gasoline fund that can do well, but if you got the timing right. So that's UGA, and there you go. A little run up here for the last few days here. Um, so between here, February looked good from 61 peaking out here at about $71. That's a nice return. So now we're starting to see it pick up again. So here we got a profit factor of 1.5, which is pretty good. Winning percentage of 42%. So if I go to the hourly, you know, you're looking at 64, 67. It's about 5% in a very short period of time. So again, profit factor 1, 41% win ratio. The next one we can look at is the bigger one allocated weighting wise is MLPX. Let's look at that one. So here we have the energy infrastructure. So this is a very nice one here. So that's an hourly chart right here. So we're going from 47 to 50, which is probably 5 to 10% roughly. Um, and again, 1.0, that's on an hourly basis, 42% win ratio. But again, if you go to the 4 hour, it'll get better. See, it's more volatile somewhat, but the momentum's there. So you're going from 46 to about $50. So that's, yeah, 10% since last month. So that profit factor on an hourly basis, 4 hour basis is kind of what I like to see, 1.2. But you can see here the percentage for this particular time frame, you boost your percent profile, percent win of winning at 47%. Okay, so we have here DFSW. This is US utility. Now I have to say I've got other ETFs that I've seen, and they're not looking great, but this one has all the allocation for that sector among all the ETFs and utilities. So if you look at EFSV, see here, Dimensional Small Cap Value Fund. Looks like I got that messed up there. Yeah, so we're looking at small cap. Yeah, sorry about that. US small cap. So these are doing okay. 28 to 29. But these candles, these negative candles, I'm not a big fan of the red candles. I don't think I'd put a lot in there. 33% win ratio. Profit factor, I probably wouldn't add it. See on the hourly. Yeah, it's very flat. It doesn't really appeal to me. The next one here is utilities. So we have here 100% in FXU. First Trust Utility, AlphaDex Fund. Really nice run up here from April 24th till about here, and it's kind of gone flat. So you're looking at $32 to about 33. So it's a 10% return over that time period. And see here a win ratio of 43, profit factor of 1.12. Let's look at the track record for that. So this is utility right here. So it is performing a little better. Right here is where you get kind of concerned if it's dropping off or not. But again, okay return, 6%. This is a very conservative sector because nothing else is really performing all that great. Um, yeah, 6.8%. That's okay. And let's take a look at the prior sector here. 6% for small cap. That's done. But yeah, that's pretty well how I'm going to add in these ETFs. Kind of conservative approach, but they seem to outperform the S&P overall. And probably is there no uh, big tech? Let me show you what that would entail here. So if I go into big tech, probably most people would want to know about, doesn't look that great. So here's the chart or the tear sheet. You can see how it's just been negative 46%, 36% versus return for the S&P, so for the Qs as a benchmark. It's been not that great except for April, but it's been super negative for May. You might be wondering, what are those ETFs? Well, let's take a look. So this right here is the overall all ETFs. So if I was to look at this, you can see here the only one worth holding is REW or TEX. And I do have tracking for cloud, which might be better than this one, but let me pull up REW and TradingView here. So we are looking at ultra short technologies. So it's measuring that let me pull up the daily here, that the tech is going to short. Obviously that's not working out. But for quite a while been shorting and it's been declining. So this one's not working out too good. But I can show you something like um let me show you the cloud, I guess. So here's crypto. Doesn't look great at all from the pics that I've seen. I can show you that. Probably people want to know about that one. Some of these don't get generated, as you can see here, because it's too negative. Um, so there's not much to show you there. Let's see. There's the same with crypto as well. Now I could rerun this and it might generate a chart for it, and I might repost and reassess all the ETFs available and make them on behind my membership, so I can do that. But that's what I'm seeing today on Monday, the 20th. So it may be totally different for tomorrow as well, just so you know. Other than that, if you want to know more, I put out the blurb at the bottom, quantlabs.net/books, if you want to join that and get on our newsletter. Got a new website coming, as it's already hinted in one of the little pages there that was went by. And we'll leave it at that. Thanks for watching. This is a new approach to doing stuff. Over and out.